Not bad.
Okay. Yeah.
Okay, I'm ready to roll.
All right. Yeah, you can start now.
Okay, hello again, everybody. This is Harry Boxer, the Technical Trader from the TechTrader.com, a site for active day and swing traders. Been around for 26 years now, and we're one of the first trading rooms on the internet way back early, around 2001, as I said. We're offering a free 2-week trial. Just come on in, sign in to thetechtrader.com, and sign up for a free trial. No credit card necessary, and enjoy the ride. For today, I'm going to need to get uh, questions. I think I have 3 or 4 ready. So let's start off with Fred wants to know about Piper, PIPR. That's Piper Sandler. Now the daily chart shows a very nasty looking long-term uptrend and then reversal. When I say nasty looking, I mean this is a typical left shoulder, head, right shoulder type rounding top, whatever you want to call it. It's a top formation. Now the stock has come down from 345 to this week's low of 206. Doesn't make it cheap. It makes it cheaper. There's a big difference. When I look at the long-term chart, the one thing I've been gleaning from this recent pullback is a lot of stocks are coming back down to the October-November high in 21. And that's exactly what has just occurred or near it. Are we going to get a technical bounce? Yeah, we do have a 1, 2, 3, 4, 5 wave Elliott wave type decline. I would say at this point, scrolling in a little bit on an hourly chart, you'll see that real resistance on this chart comes in around 266 to 73 in that zone there. That's secondary resistance. Initial resistance is right there at 243.44. So if you were looking to go long in the stock, I always counsel my traders to wait for a trend break back to the upside. You have to at least take out a prior high for the trend to turn around. Now, what I do like about the chart is it had a massive high volume reversal. It got to resistance and backed off. As long as it doesn't take out 203.05 down here, then takes out 242.45, I'd be a buyer for a stock that goes to 275, 295, et cetera, et cetera. But right now, obviously, on a daily chart, pretty nasty decline has ensued, like a lot of stocks that were extended. But that's my take, that it's not bullish until it turns around completely. And right now, it's got a V bottom with a big spike volume, the biggest of the year practically, and then a pullback on somewhat lower volume, but still, you're not out of the woods with this one. Support at 213.75 to 14, and the big one, the spike low at about 203. That's my take on Piper. Moving on. Um, I have a question on THRD. Interesting chart. Now, here's a stock that gapped up yesterday after a massive decline. It saw go from 17 down to 3. On the hourly chart, you'll see it based out for a couple weeks. No, excuse me, it's about 8 weeks. And then it had a breakaway big explosive gap. Right now, it's forming a bull, what we call a bull flag. I would put a tight stop on it under 5. I don't want, I mean, not, excuse me, under the gap here. Um, well, it looks to me like the, that the 5.15 range is a very big stopping point, but I want to go back to the daily chart. Hang on. Yeah, this is a very tough chart. When you see a gap up like that and then a stall, you don't know whether this is a takeover, whether there's something else going on. But it's unusual for a stock to trade 15 million shares, so kind of almost a storage volume on an up day, have a huge gap like that, go up about 80%, and then the next day go nowhere. I'm not sure if that's the case, but it sure looks like it. You can see how the stock went sideways for the last couple of days. But maybe if it breaks out over 515 with energy, meaning volume, I'd be interested in having it run. But it's also very, it looks to me like yeah, well, it's a pretty thinly traded stock normally. So and it probably is a thin stock. So a tough call as to where to go with this one. But I will say this, if it does get above the high of the last 2 days, which is 515, you got a shot at going to about 6. That's my next target. NAOV, yeah. Another one of those spiky stocks that exploded. We actually traded this yesterday. when it broke out across this range, we went long for a trade. It then came down and held a moving average and then exploded. We sold it up there. But on a daily basis, a long downtrend. This is, by the way, one of those reverse split stocks, and particularly in medical biotech, that tends to explode. And then, but it's also a spiky stock that does this a lot. Spike up, pullback. Spike up, pullback. Did it here too. I would not trust this one until and if I see it run back above 9.25. Once you get above there, then you can go to 11, 12, 13, 15 again. Very dangerous pattern. This rally here came on extremely low volume compared to where it was when it broke out. Only if it got above 880, 85 on volume would I go long, because then I think you can run it to 10, 11, 12, 13. And finally, PRTG. This is a man after my own heart. He likes these low price stocks. PRTG. Okay. A spike, pullback, spike, and pullback. This time, however, it's 2 consecutive inside days on lower volume. What I usually do is go to an hourly chart and you can see the pattern. What you want to do on this one is wait to see if it holds, stop under 7. I want to see if this coil of sorts breaks out. First target would be get above 9, and then maybe you can see 10, 11, 12, 13 again. But it's a very dangerous type stock. It can do this again, especially if it gets under 7. It could drift all the way back down to 4 or 5 again. Okay, up next we have a more popular stock, Tesla. And there's a couple of things I want to tell you about this one. Well, first of all, this is one of the first tech stocks to break. It broke back in January, okay? And you can see how it's come down in a 1, 2, 3, 4, and then a double bottom here. Absolutely 100% stop under 215, 214. If it breaks under that, this thing could be at 185, it could be 170 again or less. But the possibility, I'm looking at an hourly chart, of a base being put in there, and you see the declining tops line. If it spikes up above 268 to 72 in that range, you might start to see it run towards 290, and a break through that level with volume could get you to 325.27. I like the possibilities, but let's not forget it's still in a downtrend. The wave count is 1, 2, 3, 4, and this could be either truncated 5th, or this whole thing is a 4th wave, 1, 2, 3, and 4, which means that if it breaks, it could break down below 200 and get into the 185.90 range. That's my take on Tesla. Overall, the jury's still out. Harmony, the gold group, looking at the long-term chart, this is one of the stocks I've been watching for a long time. It had an inverse head and shoulders here. It broke out back in late 23 from the beautiful consolidation flag, and then broke out again. Ran to the channel top, kept tagging up towards the channel top, and then finally pulled back to the channel bottom. That was a buy opportunity because at this point it broke out again at around 8 3/4, 9, and you can see it doubled from there in the last quarter. Unfortunately, 2 things have occurred. We're going back 20 years, 23 years. Massive major tops in the 19 range. Right now, we're up to 17 and a half, roughly. I think we reached 18, 17, 3/4. It's also, I want to point out that to me, it's a 1, 2, 3, 4, 5 wave LA wave move. So it's long in the tooth. It's that key overhead long-term resistance. It's run from under 2 to over 17, 8-fold increase in about 2 years. So it may be time to peel back half your position and set a stop underneath here and let the rest ride and see if we can get it into the low to mid 20s. Up next is NVIDIA and MSTR. Well, NVIDIA is also an interesting play. I like to play the ETFs, NVDX in the lower price sector, NVDL, a little higher price one. They're both double long ETFs. Now, in the case of NVIDIA, multiple waves down. I call this wave 1, 2, 3, 4, 5, 6. I mean, this has had multiple waves down. 1, 2, 3, 4, 5. Well, in any case, high volume reversal, inside day or stall day, and then another even higher volume reversal. Watch NVIDIA closely. Let's go over the chart itself. A couple things I want you can glean from this one. You can see the 5 waves, 1, 2, 3, 4, 5. I'm going to change the angle of descent to have it show like more of a parallel declining channel. Notice the reversal and then the second reversal, which is really important, but it got right to lateral price resistance at this little gap, at this little peak here, and right in that range. So to me, NVIDIA needs to get over 115 with energy. If you see that, I would look for 7 quick points. Then you got a real problem up here with multiple tops in this zone. I'm going to have to say the next key resistance to get over is 122, 2.5. If you see that, then you have the possibility of going into the 130s again. What's the support? I would have to say on a short-term basis, I don't want to see it under 1067 zone. I would stop it under 10 or 5 in that area. MSTR, long-term 1, 2, 3, 4, 5. This is probably truncated. Look at the long-term trade. Phenomenal chart. A move that took it from 12 to 500 and some odd, and it's a split stock as well, I believe. So you can see that the long-term resistance is 500 plus. On a short-term basis, you may have a triple bottom in this area. There's also a pullback low here. This is key support. Under no circumstances do you want to have this one go underneath 225.30 in that zone. Underneath that, it could fall down to 190 or worse. What you're really looking for now is to break out over this line. Excuse me. 348.50 would get me into the 400s, I think. So watch for that. It looks interesting. It's a good setup, but it hasn't gotten out yet, of course. William Adams wants to know about Google, Microsoft, and Amazon. Let's take a quick look. The GOOGL, I don't trade the Class A, but that's fine. You can see the V bottom went heavy volume and a run up into resistance. When I look at this here, I see 2 declining top lines to pay attention to. From the gap to there. This is key resistance right where it is. If it gets up through it, you might see it back to 170, give or take a point. So we need a follow through. Now today, it pulled back. And I don't want to see it under 149.93. Let's just say under 150, I will put a tighter stop because then you're vulnerable to retest the lows at 140 or less. May not be done, and this market may not be done. But I will say that last night in a webinar I did, I talked about the fact that the last leg was so steep and got the market so oversold that I don't think it's going to immediately rally and then go to a 5th wave. I think you may need some backing and filling, either basing and then either break to the upside or the downside to create either another leg down in a final wave, or we break out and all the bears get slaughtered and we go from that. But we'll have to see. Microsoft, very toppy chart. I was showing this to my subscribers for months. How it's forming a massive top. Well, that massive top broke right there. Under 400, 404 was the support. Obviously, within a month, it was down to 344. Now, this is one of the biggest days I've ever seen Microsoft have. Last Wednesday, it went up 40 points in a day on 50 million shares. Now, that's the kind of volume you see at a reversal. In addition, the last couple of days before that were heavy downside selling climax type volume. So perfect low in place potentially. What I need to see now is a punch to 396 and then 405. There's resistance there. But that would take out this, as it is, it looks like we've already taken out the falling channel, the declining channel, which 1, 2, 3, 4, 5 waves down. So I like this as a possible reversal as well. Amazon, a little different. But all of them did the same thing. The Mag 7s all got slammed on heavy volume, turned around on good volume. Now, not quite the volume on the upside that we had on the downside, which is worrisome. I'm not going to call Amazon a reversal and a new uptrend until I see 192.3 taken out with energy. This one doesn't look as good to me as the others. Well, but it isn't bad. A question from Todd Down. Hey, Todd. By the way, if any of you guys are active traders, you want to come to my site, thetechtrader.com, and sign in for free trial. Costs you nothing. You can make a lot of money in a two-week free trial. No credit card necessary. Just sign up. Okay. Seeing Reddit, similar to the others, one of those high-profile stocks that went literally from the high 30s to 225 in about a year. I kid you not. Okay, so from the peak, it hit at 230. In 90 days, 4 months, it went to 80. Lost 2/3 of its value. And lost it in multiple waves down too. What I always look for is prior lows, draw a line. For a moment there, we got through it and we pulled back to it. Now, sometimes when you break out, the first thing they do is retest that line. If that's the case with Reddit, then maybe she can go again. I wouldn't touch this with a 10-foot pole until I see a breakout, in my mind, above there. That's over one, say 12, 13 with volume. This is still has problems. Look at the underlying technicals, how much red volume you had versus green volume. That basically means volume on down days versus volume on up days that are green on TC2000, which is the charting system I use. Underlying technicals, blah. If this is going to really be a true surge with heavy volume and good technicals, it didn't get it. So I would say I'd avoid this one until I see at least 108.9 with heavy volume. But it's a long way from here. Up to you. You're welcome, Todd. Bert Keller wants to know about KKR. Well, Bert, you can see 1, 2, 3, 4, 5 ways down. By the way, this was the Tech Trader swing short. See that uptrend? See the breakdown? See that bear flag? That's where we went short, 135. 60 days later, 86. That's an obvious bear flag. Now the declining tops line. The declining tops line is something that needs to be taken out as well. I would say that I'm not going to be happy with this stock until I see that taken out. About 112. What I don't like is when a stock comes down in heavy volume, bounces on lower volume, and then backs and fills on low volume. It's got to break up and not down. If it breaks down, I would roll out immediately and I'd stop under 96. And by the way, Todd Down, you are welcome. Lucho wants to know, what do I do in my trading room? We're day traders and swing traders, but mostly day trading 1-minute intraday charts. Like, for example, today, OST was a trade for us. Check this out. The stock exploded, pulled back and consolidated. And when it broke out right there on heavy volume, my people went long just around $2 a share, 205. Within an hour and a half, it was over 4. It was 100% in 90 minutes. I told everybody that my target was 4, 15, 20, only based on projected angles. And then it went into this. It still may not be done, although, we're out. If you had broken, that's where you should have stopped it right there at about 305. Currently about 292. It's still not in bad shape. The daily chart, another one of those tech stocks, probably reverse split. Indeed it was. And then this explosive move on a mere 113.6 million shares. Yeah, it's a pretty amazing stock today. But that's what we do in our room. I chart intraday patterns, and I give out day trade recommendations based on those patterns. All right, back to the questions. AVGO, Broadcom, they got to change their symbol. I never figured that out. I think that was, they used to be called, they merged with something and they kept the symbol. The current chart, and this is a 1-minute intraday chart, showing a big coil pattern. On the daily chart, again, another tech stock with a long-term uptrend that broke 1, 2, 3, 4, 5 waves down, a big reversal, and now a stall. This one I like, and I'll tell you why. When a stock smokes it off the low like that, from 138 to 188, 40 points in 3 days, and then does that, forms a little wedgie as the volume dissipates, great action. Only if it drops down under 166.68 when I stop it. I think the stock is going to break out again. But I would watch for over 186, it can go vertical. First, probably to about 200, 202, and then maybe up here towards 215. Those are my targets on it going forward. I don't see any other questions, David. Anybody have a question about any other stock that we didn't cover?
All right, we have a few minutes left. Add some more symbols.
Okay. LMT, that's Lockheed, I believe. Right. Lockheed Martin. Now, the aerospace group looks better than the rest of Wall Street. But even that one, Lockheed, take a look at the big move this had. A rising channel, a spike up, blow off, then a rollover Beethoven. That's what I call it. And held at support right in his range, about 420.25. What I want to see on this one, of course, is that take out that, but more importantly, that line. So you notice it ran up to that declining tops line. If I see Lockheed in the next couple of days through 480, I would look for a quick move to test 494, and then maybe we can get up to 500 or better. It's constructive, more bullish than the ones we've been talking about. Obviously 100% stop under 420, but I really wouldn't even want to see it below 448.50 down here. That's where I'd stop it. That's my take. This is total chart 2000 or TC 2000. CLS is one of my favorites as well, Celestica. One of my biggest traders in the room does nothing but trade this all day. He says it's a phenomenal trading stock. I believe him. My only problem with it is coming off the channel top, it did a 1, 2, 3. Now, either this is a massive three-wave correction, or there's a fourth wave bounce here, it needs to come down and one more wave down. So you got to be careful. But I do like the high volume reversal, that big third day there, key resistance, obviously 86. If we can get through 86, my target's 102. You get through that, I would probably look for about 120. I like this chart. For me, stop under 75. Got it? 75. EIC. Eagle Point Income Company. I don't know what this, financial, so never heard of this stock. James, the bottom line is, even a stock like that, breakdown of a massive top over a year for him, it snapped back and failed at resistance, which was formerly the support level, and it's come down and gotten spiked, blown out. It's not my kind of stock. The technicals look terrible. Unbalanced volume is still going down. Yeah, I don't, this is not a stock I'd touch, but if I got over 15, 20, I would probably go back towards 16, 17 again. Vero, V-E-R-O. I know this company very well. We traded it recently. But the problem I have is when a stock gaps up and gaps down, it's a tough call. If it gets over 463, 465 with energy across the 3-day tops, you can move halfway into the gap to 5 3/4, maybe 7. But I'm going to tell you, this is a stock I would avoid. My take. Kava. Obviously, by the way, this was on my box of shorts list. That's what I call it. We had a 1, 2, 3, 4, 5 waves up, a head and shoulder top, a breakdown. I told everybody the short when it broke, and then it formed the bear flag and got hammered to support. Now, this is a good thing. Left-handed extended V pattern, but with a neckline there, it's going to have to show me it can get up through 93 1/4. Then my target's going to be approximately 110. So you could see 17-point run on it if it breaks out, but I wouldn't anticipate that because there's a possibility all this is a snapback to resistance at the top of a channel. And Kava, I think, is vulnerable to lower levels, especially if the market goes down. Then we can see 60, 65 again on this stock. Amgen, one of my favorite companies. I'm here in LA, and I love this company. I had a lot of friends that worked for them originally. So here, they've had some great drugs of late approved by the FDA, but that is a left shoulder, head, right shoulder. Now, a head and shoulder top is not a head and shoulder top until it breaks the neckline. So it hasn't done so. It's very choppy, very sloppy, and it's not a stock that I would recommend at this point. But I will say this, from a relative strength standpoint, with so many stocks breaking hard, even biotechs, this held up very well. If it does go, 360, 65 is my target.